The financial services industry has long been involved in the global fight against money laundering. Firms such as banks, insurance companies, and fund managers identify their customers, make a point of knowing as much as possible about them, keep records, train their staff, and above all, report suspicions. The reporting is key and rests on one fundamental premise: that a suspicious transaction can be detected when it is larger than the others, or in some way out of character with what the customer normally does. Then came terror and the use of the global financial system to help fund it. And all of a sudden, new challenges surfaced for the financial sector. Who finances terrorism and how? Can you distinguish regular customers and their transactions from those connected with terrorism? And how can you prevent your organisation from becoming not just a pariah in the financial world, but the unwitting facilitator of tomorrow's atrocities? This is Follow the Money: How Terror is Financed.
Who is a terrorist? It's not a very easy question to answer. In fact, depending upon what the context is of the circumstances, one man's terrorist can be another man's freedom fighter. So with the difficulty within the international community to actually define who a terrorist is, the focus has been far more on methods as opposed to the justness of the cause they pursue.
The proposed United Nations definition of September 2005 defines terrorism as any action intended to cause death or serious bodily harm to civilians or non-combatants, when the purpose of such an act is to intimidate a population or to compel a government or an international organisation to carry out or to abstain from any act. But how is terrorism financed?
You have to distinguish, when you talk about terrorist financing, between two essentially distinctive types of activity. The first is what we could call type 1 terrorist financing. And here you are talking about the gathering together of financial resources to fund your movement. You're using it to fund arms and training camps. You may be using it to fund your political machine. Quite substantial sums of money that are being drawn from many different places and used for a variety of different purposes. Distinguish that from what we might describe as type 2 terrorist financing. This is the funding that you use to finance an actual attack or an operation itself. Typically much smaller amounts of money that are being used for sometimes quite mundane purposes: the renting of accommodation, the renting or purchase of vehicles, the purchase of explosives for cash or weapons, things that are going to be used to actually commit an atrocity against a group of people.
Financial systems and financial institutions are geared to spotting unusual movements of money, but even the most sensitive systems will spot the very large transactions first. There's a problem here with spotting terrorist money, because terrorist money, when it's for practical purposes, is likely to be moved in very small quantities. And small quantities are very, very hard to spot, even unusual ones.
It was perhaps the September 11, 2001 attacks which first demonstrated the extent of the mainstream banking system's vulnerability to Type 2 terrorist financing. Although the attacks changed history, they were funded for less than $500,000. 9/11 plot leader Mohammed Atta and his associates financed the entire operation from individual amounts which were completely unremarkable, employing three main methods which are used every day by foreign nationals visiting the USA for extended periods. Firstly, Many of them simply brought legal amounts of cash and traveller's checks with them when they first arrived in America. For example, the first two hijackers to enter the USA opened a Bank of America account in February 2000 with a cash deposit of $9,900. Many of their fellow attackers also opened accounts, but since the deposits were not suspiciously large, no reports were made. Now the hijackers could make use of international wire transfers. Funds totaling approximately $130,000 were sent to their US accounts, mostly via wire transfers from a plot facilitator in the United Arab Emirates, who used a money exchange centre which at that time did not require identification. The money arrived into a joint checking account opened by Atta and Marwan al-Shahi at the Sun Trust Bank in Florida. Finally, the hijackers used ATM and credit cards to bring money into the USA from their overseas bank accounts. Hijacker Hani Hanjour used an ATM to access his accounts at the Saudi British Bank in Saudi Arabia and at Citibank in the UAE. Hijacker Fayez Bani Hamad also used his US ATM and Visa cards to access approximately $30,000, which he had previously deposited in UAE dirhams in his account with the British bank Standard Chartered. Among his credit card purchases were the tickets for the plane which he and the others were to fly into the World Trade Center. In the words of the National Commission on 9/11, the terrorists were easily adept enough to blend into the vast international financial system without doing anything to reveal themselves as criminals, let alone terrorists bent on mass murder. The money laundering controls in place at the time were largely focused on drug trafficking and large-scale financial fraud, and could not detect or disrupt the routine transactions in which the hijackers engaged.
September the 11th triggered an enormous amount of regulatory and legal action. One of these was a greater pressure on banks and financial institutions to refer to blacklists.
There is this UN Security Council Resolution 1373, which the trust is quite simple. If somebody appears on this list as a financial institution, we will freeze the bank account. If there is any suspicious transaction on this account, our obligation will be obviously to inform the regulators, but also the enforcement agencies.
There are a number of lists that are published throughout the world, and in each jurisdiction those lists may have different names upon them. The lists are regularly updated, and so institutions also check the lists on a periodic basis to ensure that not only their customers but also people to whom they are paying funds, their names don't appear on that particular list.